Hey everyone, Amazon released its shareholder letter in which it described a lot about what's going on inside the company. So in this video, I'll dig through the details and look over what's happening at Amazon and what it could mean for shareholders. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so starting off, Amazon says that in 2023, total revenue grew by 12% year over year, which on its own may not sound incredible, but it sounds more impressive when you consider that revenue increased from 514 billion to 575 billion. In other words, Amazon's revenue increased by $61 billion year over year. In 1 year, it increased its revenue by 61 billion. There are many businesses in the world that will never reach $61 billion in sales in their entire lifespan. Amazon increased their sales by that amount in 1 year. So when you look at it from that perspective, that growth looks a lot more impressive than if you look at it just 12%. Of course, it's harder to grow revenue the larger you become. So it becomes more and more impressive if you continue delivering double-digit revenue growth at larger and larger scale, which is what Amazon's been able to accomplish. But more impressively, Amazon's operating income and free cash flow dramatically improved. Operating income specifically in 2023 increased by 200% from 12.2 billion to 36.9 billion. So its operating income more than tripled from 12.2 to 36.9. In other words, it increased by 24.7 billion or nearly $25 billion in increasing operating profit year over year. Again, the scale makes it even more impressive than the already impressive 200% growth rate year over year. Much of that was due to growing into investments the company made during the earlier stages of the pandemic. And then following up on that is efficiency improvements that management has able to make in the business going forward. So that's truly the areas where Amazon's been able to benefit from its large scale, able to find efficiencies in the business and lower the cost to serve customers. And that's all been adding up to excellent increases in revenue, in profitability, and the stock price has responded. It's performing really well in 2024. Of course, I've rated Amazon stock as one of my top stocks to buy in 2024. I've had this rating since December of 2023, December 30th to be precise, when I made that video and recommended Amazon as a top stock to buy. So Amazon continues to have the broadest retail selection with hundreds of millions of products available, and it added tens of millions last year alone. That's really the business model that continues to deliver for Amazon. The fact that it has these hundreds of millions of items attracts customers to Amazon's website. The fact that it attracts hundreds of millions of customers to its website attracts businesses to place millions more items on its website. That positive virtuous cycle keeps feeding on itself and keeps expanding Amazon's competitive advantage. And that's led to Amazon delivering close to 600 billion in annual revenue. And it makes it very difficult, very challenging for any competitor to take market share away from Amazon. Now, some competitors have shown success in certain areas. I've talked a lot about how Target has used its brick and mortar locations as a competitive advantage against Amazon, whereas previously those brick and mortar locations were a disadvantage. Now Target can deliver orders to customers purchased online much faster than Amazon can. You can buy online at target.com and have your order picked up in the parking lot within a couple of hours. And so that's now faster than Amazon. But other than few instances like Target, competitors have had a hard time taking away market share from Amazon, and you can see its revenue continues expanding by massive sums, over 60 billion in the most recent year. There doesn't appear to be anything that will slow this down if Amazon continues, especially if it continues finding efficiencies, lowering cost to serve, because then that will add even more items on the platform, if it can find ways to deliver these items to customers at lower prices. For instance, you think about an item like toothpaste. If Amazon can get customers to order toothpaste along with other items and not buy toothpaste by itself, that's a big change in the profitability of that one item, because delivering toothpaste to a customer will cost Amazon more money than the total price of the toothpaste. It's a money losing transaction. But if Amazon can get you to add that toothpaste to your subscribe and save delivery every month, now that turns into a profitable transaction. So finding efficiencies in the business model, which there is plenty to find given the sheer magnitude of the business, will lead to better profitability for Amazon, which will lead to lower prices on Amazon, a better logistics network, and again, that positive virtuous cycle feeding on itself. But it depends on the company being able to find these efficiencies. If it can't execute on this business model, then Amazon will lose its competitive advantage very quickly. It'll turn into a money losing operation so quickly before the blink of an eye, because of how expensive it is to deliver these items to serve customers. It can lose money very quickly if it's not careful. The good thing is that Amazon's management team has been very capable, especially the new CEO that came in, Andy Jassy, has been proven to be very capable. Investors were concerned when Jeff Bezos handed off the reins to Andy Jassy that the company was going to lose some performance, but doesn't seem to be the case. Andy Jassy has been doing a great job, in my opinion, in managing the business, especially because arguably he's had the greater degree of difficulty. He's had to manage the business through a pandemic and out of a pandemic, which is so difficult. It was so unprecedented to be able to manage the business through that. Really impressive. So I've given management kudos in its ability to handle the business and do a good job finding efficiencies in its business. So speaking of that, in 2023, Amazon delivered at the fastest speeds ever to Prime members, with more than 7 billion items arriving same or next day, including more than 4 billion in the US and 2 billion in Europe. They were able to do that because they re-architected the network to store items closer to customers. And the other is the expansion of their same-day facilities, where in 2023 they increased the number of items delivered same day or overnight by 70% year over year. When customers are shopping on Amazon and they see the expected delivery date is either for the next day or 2 days from now, that makes them more likely to purchase. The sooner they feel they're going to get the item, the more likely they are to purchase from Amazon. That's a prime selling point, pardon the pun. So if Amazon can get better and better and faster at delivering items to customers, that's going to make it more convenient and it's going to attract even more shoppers. So that's a double-edged benefit for Amazon. It's one of these win-win situations that's so rare in business, where a company can find it improves the service to customers, and at the same time, that improvement lowers its cost to serve, this is what's happening with Amazon. So that trimming of the transportation distance, not only does it make the speed to delivery faster, but it lowers the cost to ship, right? So in 2023, for the first time since 2018, they reduced their cost to serve on a per unit basis globally. In the US alone, the cost to serve was down by more than 45 cents per unit. So it's one of those rare cases that is a win-win situation for a business. And I'm impressed that Amazon has identified this opportunity and really pushed on it and really just dug deep into it and said, this is rare to find this kind of opportunity in business, and they've really focused on it. And they're even saying they're not done lowering their cost to serve. And I don't blame them, because they found a great area of opportunity in their business and they're focusing on it, and they're going to play this out until they find that there's no more room here, because not only does it improve the customer experience, but it also lowers their cost. So excellent job here from Amazon, and I give credit to this management team. You've heard me be critical with many management teams when they make mistakes in the business, or not when they make mistakes, but when they make decisions that I perceive as questionable or risky or unproven. I kind of question management teams because of that. And when I see management teams doing an excellent job, I also give them credit too. I give credit where credit is due, and I highlight poor decisions where I feel poor decisions were made. And Amazon is one management team where I felt that they've done a great job, especially both going into the pandemic and coming out of the pandemic. Very few companies did a good job, in my opinion, in both going in and coming out. There were some that did a good job going in, but then a terrible job coming out. Very few, and Amazon is one of them. Home Depot is another one that I felt did a really good job, and I can count just on one hand how many businesses I felt did, how many management teams I felt did a great job both going into the pandemic and coming out. And Amazon is on that select few categories of companies that did great going in and coming out. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.